Nice to meet you, everyone. If you'd like, and given if you're not eating lunch, would love to see your faces as well. So thank you, Javier. And anyone else who would like to show him or herself would love to get to know you a little bit. No, not an obligation, by the way, if you feel like. Thank you. Now, just to introduce myself, so I'm Koshu. My parents are Japanese, but they met in Indonesia. They got married in India. Was born in a hospital in Japan, but then immediately after moved to the US, and also grew up part of my life also in Brazil and Myanmar. So definitely gone through quite a lot of identity crises, as some of it you may be familiar with. And I don't know if I found my identity yet, but at least I'm still going through the phase of moving around. So currently I'm based back in Japan, but for the time being, we'll do back and forth between France and Japan. So my wife is French, well, Japanese, so we'll do back and forth most of the time. Now, in terms of the my current position, so as Anna presented, I'm a general partner at Lifetime Ventures. So it's actually an existing pre-seed firm for the past about 6 years, but we have recently launched a new institutionalized fund with strategic partnership with a research institution called Okinawa Institute of Science and Technology. So this is Japan-based, but English only, PhD only. So if you can think of mini MIT of Asia, so it's under 1,000 people, but representing over 50 countries, 80% well, migrants or non-Japanese, and was obviously attracted to the diversity as well as diversity of the people there, as well as the quality of research there. And the idea is to obviously invest in the university spinouts as well as the researchers from OIST looking into launching their own startup. But given the stage and the size, they're about 12 years old, and there are, again, 1,000 people, including the faculty. So we're also looking into, if not the majority of our investments will be initially non-OIST related startups that may in the medium to long term develop a deep tech angle with potential collaboration with OIST. So this is not a prerequisite or obligation to the investment, but we see this as a potential value add to the portfolio companies in the medium to long term. So yeah, that's a quick intro on myself.
Koshu, thank you so much. One of the things and one of the reasons, that many of us, especially with migrant background, relate too much is because of that. Sometimes when we are traveling, when we are born here and move there, some people by choice, some people forced, we go through this identity crisis. And I just cannot stress enough to say thank you for joining, thank you for sharing your story, and thank you as well, because finding investors like you who knows how it feels, it's a relief many times for many of us to move forward and to share why we're building what we're building. Moving on, what's your role today as an investor? One thing that happens a lot out there, especially with many new startups regarding of our backgrounds, is we all, with an idea, we all start fundraising, we all start joining, we all start sending our pitch decks here and there. And perhaps because of your experience, I would like you to share with us what are in general as an investor, what is the best examples that you have come across with, or the things that you can advise us, like things that we are not doing right and what we should be doing before we reach out to VCs like yours, for example?
As a migrant specific?
I would say in general, right? In this moment, I would like just to make sure that we focus as startups, and I just would like to focus as what are the things that we should know, right? Because one important element that we're all doing here, we're just founders with migrant background, but at the end of the day, the reason is sometimes we don't know people, and we start reaching out to VCs without even having any connection previously and so on. And I'm sure you get a lot about that. So maybe you can advise us a little bit. what does it feel for you as an investor every time people just reach out to you and send you the pitch deck? And ultimately, when is that moment when you say like, hey, this is a great idea, I want to invest in this? And so maybe you can guide us through that.
Sure. And this is very subjective opinion, so I can't speak on behalf of all the other VCs out there. But in my view, especially most VCs will invest in your company as an equity holder or an option or warrant to equity, meaning to say this will be a long-term relationship. So the approach should not differ that much from your approach, however it is, with finding a good friend, long-term friend, or good a romantic partner. Meaning to say, at least, again, this is really my view. Even my wife may not agree to this, but I personally believe that it is a lot of it is really how much of a fit you and your partner are. In VC and startup, of course, founder to investor fit. So obviously, as a founder, you're looking for product market fit. For pre-seed investors, we also look for founder product or founder market fit. And on an equal basis, we should be looking for a founder investor fit. Obviously, on an individual basis. So me as an investor, as a person, and as well as you as a founder, but also at a firm level, meaning to say geography, vertical or an industry, and stage of the company. Those are oftentimes constraints that VC funds already have placed on themselves with their investors. So we also have to do fundraise from oftentimes institutional investors or family offices or individuals. And our agreement with them is that we will invest in a specific stage at within a specific geography and within a specific industry. It is very difficult for us to change that or make an exception unless it's a really strong conviction we have. So just do make sure that the investor you're speaking with are right for your stage. So if it's early stage, I mean, it's okay to speak with growth stage investor for feedback, but don't expect that they will be interested in investing right away just because it's not a good match. And on the same vein, vertical and geography. Most of the time, I do have to say, many VCs would like to make it vague. Even within the investment mandate, they keep it as pre-seed all the way up to seed, Series A or even Series B. That's a really broad. But usually, if you look at their portfolio, especially their fundraise announcement, so the announcement of the investments that they've made, you can tell what their major focus is. So the best place to look for on their website is the portfolio as well as press, and then look at About Us. About Us is more of a marketing material, and it will likely be vague. Once you found the fit within the firm, I would also look for the person. So most of the time, associates or even up to principal director level, they can push for the deal internally, but they do not have the ultimate decision making. I would personally actually advise to befriend the associate so that, or whoever is pushing for your deal internally, so that he or she can push your deal internally, rather than trying to directly approach the decision maker, so partner level, unless it's a very small firm, like our firm, where we don't have associates yet. So if it's a larger firm, it's okay to talk to analyst associate, given that you're not helping their educational process. So some associates analysts, they do tend to one, take random calls that they know they're not going to invest in, to learn about the specific vertical industry, and or two, at least to show that they're doing the job. So deal sourcing. As soon as you see that they're not interested, or they're not interested in pushing that deal forward, either try to get someone higher than that person within the firm or move on to another firm. Again, it's the same as dating. Some of you may want to hold on to that person, but unless the person is likely to either progress within, I would personally avoid pushing for someone that you know will not push for your firm internally. So the fit and who you speak with, or at least a measure to that, I would be careful. Obviously, how you pitch, your materials, etc., that's important. But before that, fit and who within the firm is something I would, if I were a founder, be careful about.
Amazing, Koshu. I mean, a lot of tips. We're basically writing them down, and we're going to share that summary with everybody. That's amazing what you shared, especially personally. On that end, Koshu, because I would like to give very soon the word to Peter, so we can move on to the Q&As, because I can see a lot of people who would like to ask questions. You mentioned something very important, right? I mean, it's building relationships, but also the materials. Is there any tip that you would like to give all of us regarding the materials that we should have? Especially because, you know, pitch decks are in general very generic. There's already templates preset and so on. But something that I have discovered, and I don't know if the rest of the founders who are here might agree with me, every time you meet with a new investor or a new person who's guiding you through the process, everyone will start suggesting you change here, change that, put this, you know. So, and this is exhausting, and sometimes I'm not sure if it's needed. So Koshu, what do you have to say about that?
In general, I would ignore 90% of the advice you receive on the pitch deck. I may even extend that to general advice. We even extend it to what I say today. So just ignore 90% of what I say. Now, on the pitch, essentially, pitch is a required process, required step within the investment process, but it is not a sufficient process. Meaning to say, you need a good pitch to move forward with the investment decision. But it is, even if it's a perfect pitch, unless you go for Shark Tank, it's not the only thing you need to close a deal. So for me, what's a good pitch? It's not necessarily the font size, color, or what you put inside the pitch material, but it's good enough that you do not raise any red flag. So just help them, because investors do want to invest in your company, or investors do want to invest in a good company. So help them not say no to you. So do not raise any red flag with it. And two, and slightly more importantly, have them to be slightly more interested in your firm than before the call or before the pitch, if it's an elevator pitch. So this is too generic, but if you're going to put market size, that's fine. Just don't put it too small. Don't put it ridiculously high. Be justifiable. If you're going to put business model, make sure that the model aligns with the product or the problem you're solving. If you're going to put team, just don't put I don't know, well, politically exposed person on it, so that it automatically raises a red flag. So just help the investors be even more interested in your firm, which is at least the intention that most investors have before having that call with you.
Amazing. And last question from my end, Koshu, is, you know, there's a lot of uncertainty in the market right now. There is a recession already happening, like it or not, especially in Europe. And a lot of people are really scared, especially in the area of fintech, which you had a lot of experience with. We started to see a lot of recent startups who have raised VC money in the last year, who are starting to lay off people. And part of the work that we do at Micropreneur, and we have had some 911 calls in the last week from startups in that situation. What advice would you give, especially to many of us as well, reaching out now in recession time to VCs? Is it a good time to raise funds, and what should we focus on, or what we should be paying attention to?
Yeah, so assuming that most of you are at early stage, recession right now should not, in principle, affect the fundamental value of your firm, or even the exit outcome, expected exit outcome 5 to 10 years down the line. So in your conversation with VCs, just make sure that that is clear and make sure that they do not use that as a tool to renegotiate or negotiate down the valuation. Now, having said that, it is the demand and supply. So obviously the demand is at least on the hold off mode. So again, in as not to raise any red flag, if there's any cyclical component to your startup, just ensure that either you are showing that there's a mitigant. So you're mitigating potential risk for macro somehow. So if it's a currency risk, at least ensure that there's less currency mismatch. If it is a recession on the demand side, then ensure that there's a potential sub-vertical or adjacent vertical that you can actually target that is less prone to recession. Or if your vertical is actually not at all recession prone. So some industries do actually profit more during recession. Just ensure that you actually lay that out. And two, if in the short term it is of big concern, then ensure that you're at least showing a sufficient cash flow plan. So in the end, in recession, cash is king. So what VCs would like to see, either pre-investment or post-investment, is that the cash is cherished and cash you are focusing on either positive cash flow in the foreseeable future or profitability in the foreseeable future. So less on we're going to spend more than 50% of the use of proceeds, 50%, over 50% on marketing, and more of we have more than 2x unit economics on this service. So more on the bottom line and cash rather than marketing driven growth.